Rental rates are soaring yet again, and we saw this coming because it always happens in the summer. But one of the sad parts about all of this is because of the high interest rates environment and a lot of investors are choosing to sell, a lot of tenants right now are being displaced. And when they move into a new place, they have to succumb to what is essentially new market rent. And that is a huge payment shock for them. I'm going to go through some of these numbers, and I went through a little bit of crunching on how badly these numbers are for when a tenant is displaced and how rapidly investors are selling their properties. And it's kind of shocking. So make sure you stay tuned. Now, if you are looking for some help on how to navigate this real estate market after seeing some of these numbers and just determine whether, you know what, maybe I'm tired of being displaced, or you know what, maybe I need actually some help on how to navigate this real estate market because things are kind of crazy if you're trying to sell the tenant as well, then you can book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And if you haven't already subscribed to Prime channel, what are you waiting for? And make sure to help me spread the knowledge by smashing the like button and, subscribe, right? So I'm going to first talk about kind of how bad the rental market is right now. And for anyone who's kind of followed my channel for at least like the last 5 years, this is the norm. Okay, this is really normal. I would say the last 2 years a little bit above the norm, but seasonally speaking, summertime always ramps up into high gear for rentals. But let's kind of look at rentals.ca's kind of latest report to see how badly it is, right? So you can see right here, they're saying that basically in the last 2 years, rents have gone up by over 20%, which is kind of nuts if you really think about it. And you can see in all of Canada, Vancouver leads the pack with the most expensive, and then Burnaby, and then here we go, Toronto. We got 2,500. And this is the number I want to point you at. We are year over year up 14.1%. That's a lot. That's more than inflation, right? So if you're living in a rent-controlled building, you probably wouldn't be seeing this because the maximum a landlord could have increased. So it was 2.5 if you're under rent control. But if you're not under rent control, the landlord can increase as much as it can. So there's more holding power for the landlord. Again, evil landlords, I'll explain more later, right? But it's kind of part of the necessary evil. So if your owner or landlord of your tenant, right, is selling right now because their rents aren't kind of at market or what they are because they've increased 14%, then you're kind of collateral damage as a tenant. And this is kind of what I get into. There's a lot of people being displaced because of how badly the higher rents are. And there are articles out there saying, higher interest rates mean that it's bad for renters. And there is a correlation there, but I'm trying to break that down for you, what that correlation is, because indirectly, and at the end of the day, it's always the tenants or the renting community that actually gets hurt a lot as well. Because if you think about the whole big picture right now, landlords are actually subsidizing the tenant's cost of living if they're cash flow negative, especially if they're below market rent. Just think about that for a sec, right? So you can see a lot of these rents are all over 2,000 and they're all like on Ontario. They're all in Ontario. So it's really, really bad. Now, here's some other charts. So this is showing you from them how much the rents have gone up. So you can see basically since March 2021, call it like, kind of opening of the economy, it has just shot straight up. And anyone who argues that, investors are driving up the prices, while there is truth behind that, because there's truth behind a lot of the things people talk about, it's just what magnitude it affects the market. You cannot say that it's a supply issue unless that rents are coming down. Because if we didn't have a supply issue, right, rents wouldn't be going up so much. And it's very obvious because we're letting in 1.2 million people into the country, right? And 40% of them go into the GTA or Southern Ontario, right? So it's bad. It's really, really, really bad. Now, if you look here, similar style chart, essentially starting again in this period here in August 21, rent started climbing up. We had it going down year over year during the pandemic, and you can see they just have been going up 10% year over year. It's nuts, right? People can't afford that. They can't. And the ironic thing in all of this is despite rents going up high so much, interest rates have gone up higher, meaning that the carry costs for a lot of the owners and investors are negative, and that's kind of why a lot of them are selling right now, which again, I'll lead to the prop afterwards. Now, here's another interesting chart that I kind of pulled here. You can basically see, you have to squint a little bit. I'm gonna try to blow this up for you in post. The average rent in Toronto is about $2,800. You can see a studio or bachelor's is about $2,000. A 1-bedroom is about 25 and a 2-bedroom is about 3,300. That's a lot of money, right? If you think about it, when we are screening for tenants, we generally look for the 3 times rule, right? Meaning their gross income is at least 3 times whatever the asking rent is. So if you're asking $2,000 for a bachelor, right? A bachelor, call it like 300 to 450 square feet. We want to see $6,000 a month in income, right? On $2,000, which means that 6,000 times 12 puts you at, I'm doing my math correctly, $72,000. So we want to see $72,000 for someone in Toronto to rent a studio. Let that sink in for a sec. This is why a lot of tenants with poor credit score or not enough income are having a hard time finding something. It's really, really rough. Now, if you also look here, I just kind of pulled it because I thought it funny. This is the annual change in rents in purpose-built buildings, right? And you can see Scarborough and Brampton are leading the pack. I find that interesting, right? My suspicion is just because those were the least expensive areas, and now people are flocking to kind of the most affordable areas. That's why rents are going up. So even the least expensive areas are going up in price because people are flocking to affordability, which is the same thing kind of like when you buy, you drive till you qualify, right? Now, Urbanation does do kind of some like really good data, and this is kind of showing you the annual change similar to the charts I use for my market watch in terms of what rents are in the second quarter, right? So this would include June just as things ramp up in July and August for seasonal. So you can see in the last 10 years, which we had a fairly big bull run for as long as I've been licensed for rentals, you can see that the 2017 market, which I've always talked about, in the 2018 rents were really, really high. So you're seeing up 10% and up 8%. Obviously, it went down during the pandemic by 3 and then 6%. And now we're up 17 and 12% respectively in the last 2 years. That means that the last 2 years in terms of rent growth has been astronomical. Ties in exactly with the immigration, and then there's a lack of supply. And remember, we're also not building anything right now. So do I see any relief from like for the rental market for anyone who's renting? No, it's really crappy. It really, really is, because when you have landlords who are going to sell because they can't hold on to it, you're at the mercy and you become homeless, right? And that's kind of why a lot of people want home ownership. Like, I'll take out the financial part, whether it's good or bad to buy based on finances. But if you want a secure home, call it like you're raising your family, or you don't want to get kicked out potentially, you're going to need to own your home because you control the asset. So now you have to think about it. In the last 30 years or so, since like 1991, most of the buildings that are built, like the high rises, are condo building apartment styles, right? Meaning that they're sold to kind of your mom and pop investors who own 1 or 2 condos. And it means that the mom and pop condos, if they ever feel the risk and they need to sell, that person living in there gets displaced, right? As opposed to if you have a purpose-built condo, or not condo, apartment building that's built by like a big pension fund, which requires a lot more money and big capital stack. We talked about it before. Those guys are not going to be, hey, coming in and be like, hey, we're going to kick you out. But those are the guys that need to be building because those units are more permanent. People aren't going to be displaced because it's owned by a big pension fund. Now, granted, I think Ford in 2018, one of the reasons for removing rent control is to incentivize the building of that. And we have built a lot of that because, you know, pension funds who build this don't want to have their rental incomes capped, right? It's helping, but it's not helping fast enough, right? So when you're in this kind of market where investors are selling off their properties, these tenants are being displaced, unfortunately, right? Now, here's another interesting one. This is from Condos.ca that kind of shows you the lease per square foot in Toronto, which kind of jives with the rental.ca. You can see in the last 14 days, you're at $4.56 a square foot on average, meaning that if it's a 500 square foot unit, you're at like $22.50 for that unit, which kind of totally makes sense. And if you look down here, look, you got $4.80 for a 1-bedroom, which is basically almost $5 a foot. That puts you wide at like the $2,500 to rent. And you got your 1+1 at also $450. You got 2 bedrooms at $444. And then obviously as they get bigger, they get less expensive. But you can basically see here since 2022 in this last year, it's just gone straight up. No matter how you slice it everywhere, rents are going up at an astronomical rate, and I don't think it's coming down anytime soon. And that's kind of the unfortunate thing right now. And that's kind of why I'm making this video for a lot of people who are looking at it from a different perspective, saying, hey, look, you know what? I need to maybe potentially buy something so that I don't get caught off in this. Even though 100% I agree right now, well, let me 99.9%, that renting is cheaper because the interest you're paying on your mortgage is so high. But if you're afraid of being displaced, this is going to be the problem, right? So this is a very interesting chart that I kind of pulled a lot of data, right? And I've been taking a lot of phone calls in the last little bit in terms of like people trying to sell or even people trying to buy. And a common thing I'm seeing right now is people saying, hey, I need to do something because my landlord is X or because my tenant is X. So when I looked into the data and I saw a little strain where a lot of people are selling because they can't hold on to the asset anymore. But a lot of the times the tenant isn't going to leave, right? So I'm seeing that from the investors who are calling that want to sell. Then I'm also seeing that from the first-time buyers telling me that, hey, my landlord gave me notice, and we're going to the whole landlord-tenant board stuff, and whether they can actually legally kick people or not, that's a whole different story for another day, right? And we're seeing a lot of clashing of the two. So what I did is I basically pulled the data on how many properties are being sold tenanted or partially tenanted, right? And you can see on the left one over here, I basically took the data from June 1st to yesterday on July 24th, right? And I just did the CO1 and CO8 era, just specifically for condos. Because we know the condos are mainly a lot of investors because, again, part of the evil, your end users aren't going to be buying pre-cons most of the time. It's investors who are buying it to build these things, right? Because without the investors, you're not going to have rental supply, right? So it's a catch-22, right? Even though it's tenants hate landlord. So when I look at the condos area, I would say a lot of them are investors. I think Urban Nation came out like in the last few years, like 40-something% owned by investors, which is perfectly fine. But you can see in 2023, a third, like in the last, I don't know, like 45, 50 days or so, a third of the condos in this area are being sold tenanted, meaning that when you're showing the property, the tenant still lives there, right? And I generally tell my clients, if you're going to sell something, you want it vacant. You want the person going in there to buy it to be like, oh, this has to be a very, I can imagine me myself living there, not seeing a lot of tenant stuff. And if they're not crop, there's just crap everywhere. I've been into a lot of those, right? So a third of them are right now being sold tenanted. Last year, it was about a fifth, 22%, maybe a little bit less, okay? Then a fifth. Then the previous year, you got 15%. So you can see this number is going higher and higher as interest rates start going up, meaning investors can't hold on, right? Which is fine, right? But the problem right now, and what I'm seeing is a lot of investors are just selling it regardless of whether the tenants live there, their lease is expiring, or they're on month to month, and they're just getting rid of it. And I would say a big bulk of the condos in the Toronto core are actually under rent control. So when you are basically selling with a tenant in there, very likely that tenant is under rent control and they're paying below market rent. Now, here's kind of all the problem in this entire thing. And this is why I kind of want to make this video. If the person that is buying right now in this market is not an investor, because interest rates are very high, the yields don't make sense. We talked about the cash flow index that was from Edge Analytics from Ben before. It doesn't make sense because you're basically subsidizing that tenant to live there if you're buying currently right now at 80% at the current rates, which means that investors are not buying, which means while the market is slow, the people who are actually buying are end users, meaning they're going to live in it, which means that the tenants are going to be served an N12 notice that the buyers are moving in. So now they have 60 days to basically uplift their entire home that's under market rent. So call it like a one bedroom for like $1,700, $1,800, $1,900. And now they have to go back into market and they're looking at the $2,500 for that same one bedroom. So that's a $600 a month shock, or almost like a 30% shock in terms of price. It's almost as bad as some of the mortgage payments I've gone up for investors because of the interest rate. And this is kind of what I'm seeing right now. There's a lot of tenants being displaced because of the nature of how the resale market is right now, and the buyers are essentially end users, right? And I tell a lot of my clients this too. If you're selling a property, you're probably getting like 5, maybe 6% more money if it's vacant because it shows better, right? Especially if you have time to stage it, you get your money back. But if you're basically showing a tenant, you're going to take less money. And this is why I'm saying there's a little bit like financial stress, or some people don't hold on, because sellers who are trying to sell a condo with a tenant know that they're going to get less money and they're still getting rid of it because of the high interest rate, which means that regardless of whether the tenant puts up a fight or not, they're going to try to get rid of it, and then that tenant's going to get displaced. So it's a really crappy situation I'm seeing a ton of right now in the downtown core, but that's kind of what's happening. Now, on the flip side, I did the same thing in all of GTA. Obviously, there'll be less, call it like investors, because, in all of GTA, there's like a lot of freehold homes, which tend to be end users. And you can kind of see that trend too, right? So they were around like 13% in 2021, and in 2022 it was around 15%. So it went up a little bit. And now you're seeing it at 23%. So it is going up, meaning a lot of these freehold homes have tenants, they're being sold with tenants in them. So same thing. A lot of these like freehold homes, I would say, are more families, and they're being displaced right now, and they need to go find somewhere else to find a place. And that's kind of why the rental market going up in price with tenants being displaced right now and sellers selling with tenants is just like a poo-poo show. Like, it really is a poo-poo show for people who don't own their homes. And It's a very unfortunate fact of what's happening right now with high interest rates. But when the rental market is going in high swing, it's causing a lot of this collateral damage that I'm seeing for the tenants. And honestly, I feel very bad for them, because if we were truly concerned about people and having a roof over their head, we would incentivize a lot of purpose-built apartment buildings so that they cannot be displaced. If you want to have a mentality and kind of like a cohort called like our generation where renting is okay, you cannot be displaced by your mom and pop because they can't hold on to the property, which is why you need to incentivize these big pension boys or girls to come and build these massive apartment buildings. Yes, they're going to increase your rent all the time, right? But at least you'll never get displaced. And that's kind of why I don't think rents are coming down. I think rents are going to keep going up, and a lot of people are going to feel higher rents when they get displaced. So what can we do? It's like, there's no silver bullet. I think building more is helpful, right? But I think we need to remove a lot of the caps, remove a lot of the taxes, and just let these apartment buildings go. The only way you can get prices from actually going up so high is to create more supply. I don't think it's going to come down because rates are going to keep going up, like the rental rates, but at least you can prevent how quickly they're going up. Because if you look at this chart right now, 17% a year is stupid. It is stupid. Yeah. Anyways, I hope this kind of gives you an idea, and kind of one of the rant, but like of what's going on in the rental market. And if you're kind of contemplating whether you should be buying right now to prevent yourself from, being displaced right now, because a lot of people I know who are calling me first-time buyers have banked up a lot of capital by paying under market rents. So now maybe the time for you to actually find something. And unfortunately, having said, I don't like hearing tenants being displaced. As a person who's buying right now and taking advantage of the market where, people aren't buying, you have a lot less competition, investors are out of the market, and you're basically buying and you can get this tenant displaced out because those are the only people buying. Yes, that is an opportunity for you, but unfortunately the tenant is also being displaced. So there is some moral hazard in that, but from kind of being opportunistic, yes, you can capitalize on that and get into the market. But again, it's still going to be more expensive than owning. It's just how much do you value that permanent roof over your head? Anyways, if you want to talk about that in your personal situation, you can book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?